Welcome to Biztechasia's hottest startup show. Our guest for today is Richard Joffe. He's the CEO and founder of Honey Insurance. Honey Insurance is smart home insurance and is on a mission to eliminate the majority of avoidable accidents that happen at home. Now, to date, this innovative startup in Australia has raised 15.5 million Australian dollars. It's the largest seed investment in Australian history. To tell us more about this, Rich, welcome to the show.
Thanks, Brian. Thanks for having me.
Now, Rich, for a start, could you give us an overview of Honey Insurance and your journey from inception to where it is today?
Sure. So I moved to Australia from San Francisco about 4 years ago. One of the first things I realized when I arrived was that most of the industries in Australia are oligopolies. And being a founder, I kind of smelt that would probably mean that there was an opportunity to innovate. If you have 3 to 4 companies that control any industry, usually they become a bit lethargic. So, and insurance was really interesting. It's a huge market. You'd think it's a niche, but in Australia, it's about 15 billion alone. And when I got home insurance the first time, I realized there was this really strange dynamic where you're paying a couple $1,000s a year to protect your house, but you really get nothing for your money. You never hear from the insurance company. And in some sick way, they're almost incentivized for something bad to happen to you because your rates go up and they make more margin in an absolute way. And so I thought, this is kind of crazy. In the States and in Europe, there's different companies playing around with ways to actually improve quality of life. What if I took a whole bunch of those best practices and kind of wrapped them into a new model? And so the idea of Honey was, can we create a company, an insurance company that actually reduces risk? So we give away technology, we give away services for free or discounts that reduces risk. So over time, insurance goes down and down and down. You quite literally have cheaper insurance every year because the probability of an accident happening goes down. So that was the genesis of it. It started 3 years ago. I created really a consortium of partners who invested. So we've raised about 40 million so far. And I'm very passionate in all 3 of my companies. Investors have funded the companies, customers have funded the companies. And I think it's very important to do that. So all of the investors this time around were distribution partners and folks that understood insurance deeply, but understood it needed to evolve and wanted to be a part of that, right? So we've now gotten to the point where it's scaling, and I think we're on target to be about 5x up this year in ARR. So it's scaling nicely. We've gone from I think about 15 to 85 people in the past year. So it's moving in the right direction, and it's an exciting time.
Okay, Rich, you just mentioned about this is your 3rd rodeo, essentially. You've exited 2 startups previously. 2015, you started Stella.ai, a talent network, and then you rolled it up together for $1 billion and merged it with Trust Staff and Fast Staff. You also founded Park Assist in 2005 before that, and then went from scratch to a 30 million business, sold it to a European public company in 2013. What are the key lessons that you've learned in those 2 journeys that you could share with the audience? And then also what you then used in terms of that experience in your Honey Insurance execution?
So my first company was Park Assist, which is all those green and red lights that show you where to park your car when you're driving around, and it does find your car. And there were a couple of big lessons there. I think one of the hardest things I learned at Park Assist was that it's just very expensive and painful and takes a long time if you have to educate a customer on a new concept, right? So if you go out there and say, hey, I've got this new idea, like completely different to anything you understand, it's very hard for people to get their heads around. It's much easier to take an existing product and essentially say, I'm going to do something that's dramatically better across, either price, service, or product quality, right? But if you pick an existing product and just hammer one of those areas and improve it, the customer understands. They understand an apple pie. They also understand an apple pie at a quarter the price. They understand an apple pie that tastes way better than one around the corner. And, they'd also understand an apple pie that's, the bakery is open 24 hours a day, right? So if you go and take an existing product or service and you just dramatically improve it, that's way better to start a company around and to scale a company than to come up with something radically different, because the path to educating a customer on a new concept entirely, it's just very expensive. It takes a long time. So that was really a difficult lesson to learn the first time around. And, obviously Honey Insurance is home insurance, and we're competing really on service and product this time around. The other big thing I learned was alignment. So I think most startups die far more from suicide than homicide. It's very rare that you get out-competed by incumbents. Like, it's very rare that a big company suddenly goes, you know what? We're going to put 100 million in. Everyone's going to eat bricks for breakfast and work 80 hours and weekends, and they're going to take you on. Like, I've virtually never heard of that, right? What happens typically is that there's misalignment internally. Sometimes you miss the timing, or you try to solve a problem and you're too early or late on the technology curve. Those things happen, of course. But, generally speaking, you have misalignment. You have co-founders who wanted different things. You have investors who wanted different things. You have customers who wanted a different product to what you built. You have misalignment fundamentally. And so, and I had plenty of that at Park Assist. And so I learned the hard way, it's really important to have like violent alignment, right? Everyone has to be in it for the same reason. You can be big or you can be small, that's fine. You can stay local and be dominant or want to go to multiple countries, that's fine. But you just have to be very consistent with your view. So at Honey, as an example, everyone has equity in the company, from a 20-year-old person in the contact center right through the C-suite. Everyone understands, we want 10% market share. It's a $3 billion business in 4 years. The investors understand that. They understand what we expect from them. It's an equity play, not a distribution margin play. Like, everyone is very aligned with the end goal. And so, I learned the hard way that you have to be very honest with yourself, because sometimes that means you're turning down people. There's people who join and go, listen, I just had my first kid. It's really important to me. I can work from home and never come to the office, or I'm the sole breadwinner. I can't take a pay cut. Those are all fine. There's nothing wrong with working with any of these people. But if you want to go on that mission, then you have to be honest and say, listen, you can do it, but I want to be clear. This is what we're building and this is the expectation. And this could be your thing or not, right? But you have to be willing to turn down customers and investors and employees and teammates if they're not aligned, right? And that's a hard discipline. So that was a big lesson, I think, as well, right? And going global too quickly. I think you see that a lot I think a lot of American companies do that, especially to places like Asia, and get their butts kicked, right? The reality is Malaysia has very little to do with Japan, has very little to do with China, has very little to do with India. And it's very easy to get your first deal done. We ended up in 20 countries at Park Assist, and very few of those countries really were ever profitable at scale, because you can get your first deal done, you do a handshake, but then when it comes to actually maintaining that customer base and building out real lasting infrastructure and supporting the customer, it's easy to forget how expensive it is to travel, right? It's sexy initially, but when you really get into it, you really shouldn't leave the shores until you've really exploited the profit pool locally, right? So Honey is Australia only. We'll come to Asia at some point, but only when we're out of growth locally and out of profit pool locally, right?
Okay, so which comes down to the product itself. What is your secret sauce for success, and how are you disrupting the insurance industry, the home insurance industry in particular? Because you're rolling out tech upfront. This is unheard of.
Yeah, so there's two things I think that are kind of broken in the home insurance industry specifically. The first part of that is really around distribution. So how customers buy, both in terms of the type of distribution that's available. So it should be available when you want to buy it, not just at the bank or through a comparison site. So there's lots of opportunities where people want to buy home insurance that's not available currently, home builders or, real estate agents, et cetera. So we need to fix distribution. And then the second thing is we need to actually reduce the price of insurance by reducing risk for people. And so we're spending all of our time and energy thinking about, all right, well, you can get these free smart home sensors. If you take them, you'll get an 8% discount. You don't have to, but if you do it, you're safer, price goes down. And we're going to be releasing over the next couple of years other services and tech where we'll continue to give you, free technology as long as it reduces risk. So you can think about, how do you reduce water leaks? How do we reduce, could be a roof issue, right? And so we're spending a lot of time thinking about, if you want to go and spend $500, $1,000 a year protecting your home proactively, how do we make that super easy for Brian so that ultimately insurance is $1,500, not $2,000, right? But that's the future of insurance. The future of insurance should be that you're not using it, right? I mean, that's really the holy grail if you strip out the way the current industry works. Currently, that's not the way it works, right? But that is what the future should be for that industry.
And what is really interesting about what you're doing is this. So you give your customers an 8% off their premiums if the sensors are switched on, the tech, the 250 Aussie dollars of tech that you give them up front.
Yeah.
But what's really interesting for me is also the following. Yes, you incentivize them to keep the sensors on. So you are collecting data at one point. But what also is the case is you're actually building customer loyalty, because once you rolled out the tech, they're not going to change insurer because they've got your tech running in their home.
Yeah, I mean, that's certainly the hypothesis, and it is starting to work. And so, there's several benefits you can get from people using technology more thoughtfully in their house. One of them is they stick around for longer. As you said, we're in an industry that's commoditized. And when you're in a commoditized industry, there's an opportunity to say, okay, can we break off a third of the industry of customers as a segment that would be happy to pay more or would stick around for longer if you offer them a better service, right? And the answer is almost certainly for home insurance. And so we do believe over time that retention will improve, and we're starting to see that. The second is if people are safer, it's selfishly better for us too, right? So if we can eliminate about the 50% of accidents that are non-weather related, right? So half of the accidents that happen are kind of, events of God, right? From bushfires to hailstorms, but the other half are avoidable. It's like a flexi hose burst. You didn't know you have to clean your gutters annually. You had no idea that the boiler is super old. Like, people have no idea what to do. And so if you're able to actually help identify those issues and deal with them for people, half of the accidents that happen to people, which range from your house went up in flames to you're dead, are quite literally avoidable, right? And so we see a world where we're able to give away this technology for free. It reduces the claims rate as well, which means it further pushes down the price. So retention goes up, price goes down, and then hopefully you're telling your friends as well, right? So the cost to acquire a customer goes down.
And so this is really interesting because one of the things is some of your investors and partners are basically reinsuring you as well. So as you mentioned, they have also then access to all this data, which then helps them not only with you, but across all the other businesses.
Yeah, I think data, AI and data, these are things that are often thrown around, but I think beyond the marketing spin, I think are rarely used in practical use cases to be high impact. I think there's no question that if we have a customer who's actually doing things proactively to protect their house, there's no question that is a better customer and lower risk than somebody else. And there's no question that for many of the companies that are in the consortium, so our go-to-market strategy has been to get all the distribution partners to invest, right? Because it kind of guarantees a certain return. And there's no question that data is super helpful across different partners. So for example, if we know that someone's super loyal as a retail customer, well, they're probably going to be really loyal as well as a utility customer or an insurance customer. So there's no question we can give discounts essentially to better customers. We would never do anything that worked against customers, but I would view it more as cherry picking better customers, is how I kind of depict it, right? If we can get the data that helps us know that Brian is a better customer, sticks around for longer, more loyal, less likely to commit fraud, well, we should give Brian a discount. And the more data we have, the more likely it is that we can find the 10% of customers that represent 50% of the profit pool. I think that's kind of the bogey. The bogey is, how do you find the 10% that represent the 50% of the profit pool? Because when you really go down the rabbit hole, not all customers are even close to equal, right? And I think people often view all customers as equal, certainly in a lot of startups. And I think that it's easy to cross-subsidize, but it turns out there's usually a relatively small cohort of your customers that are the super users and super well-behaved and deeply loyal. And they're often the customers you actually don't put enough time into, right? You take that for granted. Mm-hmm. And that's very dangerous, I think.
Now, Rich, what's next in 2023 for Honey Insurance? Because you alluded to the fact that you've got more services in the pipeline. Could you share some insights into which direction you're taking?
Yeah, so we're going to be releasing a new platform later this year, and that platform will, again, be the next phase in helping to reduce risk for people across services and tech. So I can't spill the beans on everything yet, but it's in pilot and it's working, and we're very excited about that. But it's going to be, we think, a global first to our knowledge. One of the benefits of Australia is that you have very high density, and in many Asian countries. So about 70% of Australians are in 5 cities, for example. That's a huge advantage, right, versus a lot of European or American states. And so that means that our ability to go to houses and help people, for example, is much better on unit economics. So we're going to be looking at ways to actually help people more. Over the coming year, we have a couple of big partners that are launching. And certainly over the next 2 years, we'll start to look at other Asian countries, assuming that the reach of Biztechasia is as good as you say.
Now, I want to move on to you as a startup founder. As I said, this is your third rodeo. What are some bits of advice that you could give some of the audience here that you'd like to share in terms of some key lessons that you've learned over the years?
I think having your customers as your investors is something I'm really passionate about. It's one thing to go off and have an idea. And the problem is that your friends and family and people around you, they're all going to want to make you happy. No one's going to want to really give you honest advice. It's very hard to get that. And so the only real litmus test, if you have business model fit, is that a customer says, I'm going to put down a deposit, $100,000 to buy your service, and it costs you less than $100,000 to make it, right? Like, unless a customer wants to invest or put down a purchase order against your product, you really don't know. And the worst thing you can do is waste your time, right? Where everyone's nice to you and smiles at you, and you go off and you really don't have a very potent value proposition. And so I think one of the things I'm very passionate about in the founder community is making sure that people are just super disciplined about not giving up their day job and moving forward unless a customer is either investing or putting down a purchase order, because you know that you're probably right if that happens. And if they don't, you're really rolling the dice on randomness. So I think one important lesson, I think, is to be customer-led when it comes to funding and POs before building any products. Another one is the alignment one we talked about, which is just being really honest about what you want. It's fine to say, I want to make $1 million a year as a private company with no board. That's totally cool. But if you don't speak your voice early on, you're going to end up getting different people who want different things internally, and it can really go sideways. I think you just need to be honest with what you want to build: domestic, international, control, scale. And then the other thing I think is just, it's important to pick the right space at the right time. If you look at the top, I think the math is that it's better to be average in the top quartile industry than the very best at the bottom quartile, right? So if you open up the best retail store, right, you are worse off than the most average person doing crypto last year, whatever like you want to be in the right booming space, right? And people grossly underestimate that. Like, you can be very average, and if you're in the right place at the right time, you're probably going to make it. And you can be exceptional, but if you're in an industry that's struggling, meaning low margins, shrinking, it's very hard to make it. So you really want to make sure that you're in an industry where there's good margins. Think 30% EBITDA, not 5. You want to be in an industry that's growing, think 15 to 30% annually, not 5, right? And it's not personal, but I do think that it's important to make sure that you're honestly in that quartile, because a rising tide cannot be understated.
It's been a fascinating conversation, Rich. I really enjoyed this. Before we leave, any final words of wisdom that you'd like to leave the audience with?
It's hard. There's no question, if you're starting something, no matter who you are and where you are, it's just super hard. And I just think you've just got to listen really, really well. Every single time you get, an investor who says no, just ask why or what you could do to make it better. Every single time someone doesn't want to join, ask where else would be more attractive and why. You just have to be like a learning machine, I think, right? Because, the entire journey, I think, of founding a company is essentially no, maybe, no, maybe. And so you have to become very, very good at just listening and learning so that you can rapidly move into the space where you can win, right? It's unlikely that what you originally cooked up is the perfect place to scale. So,
Rich, thank you very much for taking your time to come on the show.
Pleasure. Thanks for having me, Brian.
I'm Brian Fernandez, and we've been speaking to Richard Joffe. He's the CEO and founder of Honey Insurance out of Australia on Biztech, Asia's hottest startup show. This video and podcast will be on our social media platforms as well as our website, www.biztech.asia. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.